Okay, so just wanted to start with the very first video. I just want to cover the foundation of everything we're going to hit. So this is extremely important, probably the most important part before we get started diving into looking at charts and everything. So this is the market cycle. So there's four phases to the market cycle. So there's the accumulation phase, the markup phase, distribution phase, and finally the markdown phase. So those four phases of the market cycle, they exist in all markets. So if you're going to look at a candlestick chart like the ones we're going to be looking and learning, you're going to notice those four phases of the market cycle on any time frame. So when I say time frame, I'm referring to if you're looking at a daily candle chart, which shows each one of these candles represents one single day, so the price moving within that time frame in a day, all the way down to, let's just use this as a point, a 1 hour chart. This is an attractive chart to day traders. So each one of these candles, we'll zoom in here real quick so you can see, they all represent 1 hour. So you can find those four phases of the market cycle in any time frame, even down to 1 minute to 1 second. It doesn't matter. So just keep that in mind when you are drawing out your charts and you're getting ready to open positions and buy stocks or crypto. Just remember what phase of the market you potentially are in. You're going to need to study this and dive a little deeper. I'll put the link in the description for investopedia.com. It's a great resource. It's essentially the Wikipedia for investing, but you can find all of the information I'm going to reference is going to come directly from this website. It's been one of the biggest resources for me and my success. So when you go to investopedia.com, if you want to see more of the actual pictures and charts involved with what I'm talking about, you can go and just type in the four phases of a market cycle in the search bar. It'll take you right there. So the very first phase of the market cycle, that's going to be the accumulation phase. So I'll just read directly from the website. It says, this phase occurs after the market has bottomed and the innovators and early adopters, so those are experienced traders, money managers, they begin to buy. So they figure the worst is over. At this phase, valuations are very attractive. And general market sentiment is still slightly bearish. So people are a little scared still at that point. So what ends up happening is the people who are very smart and they're following these markets, whatever market they're investing in, they recognize that once it reaches a certain point, the charts start to look attractive for buying. They notice that the sell-off is eventually stopped. So they're buying and they're accumulating. So for instance, smart money, a good strategy would be when the price drops and bounces, so if you'll notice, it looks as if it's bouncing off of the ground or some support level here. Smart money's buying somewhere in this range. They'll wait for it to go up top. It pulls back, dropping a little bit higher, but roughly still in that same range, so they're buying more here. You're going to notice, no matter what investment, specifically crypto too, when you look at smaller coins, the market is very easily manipulated, meaning the price bounces and goes all over the place. It'll pump super high and it'll crash really hard. And that's because there's a small amount of money invested in that specific asset. So the more money you have, the more control you're going to have over that price. So for instance, things like Bitcoin, these billion-dollar investors, these hedge funds, these money managers who have an extremely large amount of capital, they can't just throw all their money in at one time. What would end up happening is they would jack the price up super high and it would mess with the market pretty significantly. So to keep the market somewhat in control to where they don't cause a ton of chaos, they tend to buy in these accumulation phases, okay? And then also too, if you're a smart investor, we're gonna talk about this too as well, is I've been buying these dips as well. So you wanna follow these market cycles because they're gonna make nailing entries into coins so good, and you're gonna have huge upside potential as long as you understand how this works, okay? So the second phase is the markup phase. So at this stage, the market's been stable for a while. It's beginning to move a little higher. So the early majority are getting on the bandwagon. So this group includes, technicians who see the market's putting in higher highs. For instance, here, we'll zoom over here. We'll talk about that in a second. Higher highs. This high is higher than the previous high. This high is higher than that previous high. But also higher lows. So this low, this is a higher low. This is an even higher low. Those are all very strong signals that there is a strong bull market going on. So keep that in mind. Look for those higher highs and those higher lows. So that's a good indicator for smart money investors. They're looking for those type of signs. So as that phase begins to come to an end, the markup phase, sorry, the late majority jump in and market volumes begin to increase substantially. At this point, the greater fool theory prevails. Valuations climb well beyond historic norms, and logic and reason take a backseat to greed. So while the late majority are getting in, the smart money and the insiders are unloading. So let's go back and we'll use this point of reference. So let's see, May of 2021 to July of 2021. So during this couple months, this is that accumulation phase. You'll notice the markup phase is taking place here, right? Price is going up. Those people that were buying back in here, those billion-dollar hedge fund managers and everyone who's got a ton of money that controls a good majority of how the market moves, they're selling on these points here. They're getting rid of little by little. Just like how they slowly bought in on these points here, they're slowly selling as the market's continuing to rise, okay? So the third phase is the distribution phase. So in the third phase of the market cycle, sellers begin to dominate. This part of the cycle is identified by a period in which the bullish sentiment of the previous phase turns into a mixed sentiment. So prices can often stay locked in a trading range that can last a few weeks or even months. So just like we were talking about the markup phase in phase 2, we reach a point where we're at the distribution phase. That's when there's not any higher highs or higher lows taking place. You'll notice that the price has kind of peaked. Almost, you'll notice it looks like a mountaintop, right? It reaches a point where there's not enough buyers to move the price up. And then those buyers, who are usually late people to the party, you know, your cousin Ricky or your Aunt Susie, who you told to buy Bitcoin at Christmas dinner at all-time high, next thing you know, they're caught in here, somewhere in this range. And then we reach what is the final phase, which is the markdown phase. So the fourth and final phase in the cycle is the most painful for those who still hold positions. Many hang on because their investments have fallen below what they paid for it, behaving like pirates who fall overboard, clutching a bar of gold, refusing to let go in the vein of hope of being rescued. It is only when the market has plunged 50% or more than the laggards, many of whom bought during the distribution or early markdown phase, give up or capitulate. So unfortunately, this is also a buy signal for early investors and a sign that a bottom is coming. So it is the new investors who will buy the depreciated investment during the next accumulation phase and enjoy the next markup. So just do your best. I want you guys the first thing you need to do to get started is go to tradingview.com. There's also a website called Coinigy. There's a bunch of different websites that show charts like this, candlestick charts. I prefer TradingView. It's the most popular. It's also the most stable. You can download a free subscription. I think it's for 30 days, if I'm not mistaken. Just download it, do the free trial. If you need to make a couple emails and do more free trials, just make sure you practice this. Go to the investopedia.com, type in 4 phases of a market cycle, pull it up, and then go find an asset, like look at Apple or go look at Bitcoin or any investment you're looking at. You'll be able to find those market cycles. So do your best, do some homework. Go locate where those market cycles are taking place on the charts. And the more that you understand that, the way more successful you're going to be going forward. So in the next few videos, we're going to talk about price action, just how the charts work, okay?